Good morning, bright and early today. It's 20 past 7 on Monday morning. You got your reports last night, of course, cheat sheet and everything else. Right, we are looking at today. I thought I'd just run through some Fibonacci stuff. Fibonacci is a big thing for me, as you know. I use it a lot, or those of you who've been following me for a few months know that. Very useful tool. And right now, some of these Forex markets are really adhering to the Fibonacci levels. So it's quite a good tool for scalpers at the moment because there's still quite a lot of sideways movement. We had some real nice bursts. Actually, this burst up here, Canadian dollar versus the yen, was great. But now we're consolidating. So when we consolidate, it's Fibonacci levels really become very useful. So I'm actually going to look at this on the hourly chart. You can see that the market has dipped. So I've taken the low of that last move that I just showed you, actually from that September low when we rocketed up. I've taken those Fibonacci levels from the low to the high, very simple. And we have a support level here of, where are we? Crosshairs. Support level here at 23.6% fib at 91.10. So we've been down as low as 91.00. So that support level is clearly holding for the Canadian dollar versus the Japanese yen. You could even put some fibs on there. Let me just do that for the bounce in the very short term. So there we go. This is the way I like to break down my charts and put these fib levels all over the place, really. There we go. So now, if I zoom out, there we go, zoom in rather, we have very clearly got a resistance level at 91.40, 91.50 on this little bounce here. And that ties in quite nicely with the swing low that we had in the first week of November. Ties in fairly closely to that little swing high we had there. What was the high? 91.54. Okay, so yeah, it was only 10 pips above. And we've got the 100 hour moving average easing gradually to add weight to that 91.45 area, 91.45, 91.55. So just by doing that, just by breaking things down with Fibonacci levels, and your moving averages are already on there, of course, so it's not like you've got to plot them. But if you just throw your Fibonacci levels on, that really does work quite well as just price as targets, as resistance. You know, you can see here that for the Canadian dollar versus the Japanese yen, if we were to continue up, the hourly chart is giving us the 100 and the 200. 100 and the 200 and the 500 hour moving averages just coinciding there around that 38.2% resistance. So we really would have a very strong resistance level there at 91.75 should the price rally up at the early part of this week. On the daily chart, I do like to put all my Fibonacci levels in as well. So for example, there we go. Let me grab that, just move it along a bit. I've taken the full swing low in this case all the way from the 13th of March of last year, capture that whole move up and then broken down my fib levels from there. So I have taken, you see how here the market was trading mostly sideways really, and then boom, it took off a little bit like this one here. It really took off. So and that's right around the 61.8% fib. So I've added another set of Fibonacci levels there. I think that's appropriate because it's just before, as I say, the market took off, and it is just at the 61.8% fib. So that gives me another set of nice fib levels with a support level at around 90.30 should we fall another 100 pips. So that's CAD yen. Aussie dollar is also respecting the Fibonacci levels. Let's look at that on the hourly chart. So we've got 50% fib holding the downside, real nice bounce off there. We've bounced back, so I've got a short-term set of Fibonacci levels there, just taking that last move from the swing high to the swing low. Gives us a 23.6% fib resistance at 75.05. You can see very, very much respecting that at the moment. On Friday, we reversed from there. So we'll see what happens. If we break higher, obviously, then we could be headed certainly towards 74.30, 74.40. Even the longest term set of fibs that I've put on the daily chart are also adding weight to those levels. So if I just go, actually, I can just put this on the 4-hour chart. I think that would be clearer. 444, there we go. 4-hour chart. Okay, there we go. So if I scale that, there we go. So taking the swing low from the 30th of September up to the top there, then you get this first set of Fibonacci levels 50% fib has been a good support level. Now we've got 38.2% fib being a resistance level. If we were to jump higher, get up to the sort of 50% fib on the short term, we would also be then just slightly below the 23.6% fib on the long term. So that, let me do a grab here. That sort of 74, 55, 74, 65 area, that would be a very, very strong resistance, especially when you bear in mind on the 4-hour chart that we've got this moving average crossover here, which is obviously a bit negative, the 50 crossing below the 100 period moving average on the 4-hour chart. Certainly a lot of resistance up there should we get that high. Okay, CAD yen we've looked at, euro, US dollar. Now this has been a really confusing picture. When you look at this chart, when you're looking on the daily chart, you know, is that the daily chart? Yeah, daily chart. So, I mean, lots of sideways movement here. You know, what kind of pattern is this? I don't know. So you really have to then rely on your Fibonacci levels again. So I've got the Fibonacci levels on the longer term, and you can see the 50% fib down here at 114.90 has really held through October and November. We've actually got a bit of a double bottom on there, if anything. And then the 38.2% fib on the longer term swing is at 116.94. That ties in really nicely with my shorter term fibs here, which I'm going to look at in a second. But I just want to show you how the longer term fibs, I say longer term, of course, this is only going back to March of last year, but that, you know, that's longer term enough, isn't it? 18 months. These levels are still very, very relevant to today, and these fib levels are also tying quite nicely with this swing low here. Not quite with this one, it's obviously a bit too low, but definitely that swing low and that fib level is tying in with the short term levels. Okay, let me move along and zoom into those ones. How can we best do that? Spread that out, put that down there. Okay, that's good. That's clearer. So I've now broken this swing move down into fib levels, as you can see. Took that one. And then I've broken down again from the 61.8. I've added another set of levels because that looks relevant. That's a nice peak, and we get another swing move down. So this gives us the levels that you can see here. Obviously, the 23.6% in the very, very short term, around 116.20, is definitely working as a resistance level. Should we break higher, we've got a really nice resistance level around 116.90, 117.00, tying in quite nicely with that 38.2% fib that I showed you back here. So, you know, all working. If we were to get through there, we'd be looking for 117.40, 117.90, 118.00 as the next levels. So put these fib levels on your chart and have them ready. New Zealand dollar in the short term. Let's put that on the hourly chart. Again, testing that 38.2% fib, overran it slightly, but then we've recovered back up to the 23.6% fib, and that's also meeting some resistance from the 4-hour on the 4-hour chart from the 50 and the 100 period moving averages. So we might well turn around from there. That's pretty much it. Japanese yen. Okay, yeah, this is another one that's worth looking at. What do I want to look at that one on? Let's look at that one on the daily chart. So I've taken a swing low from January low all the way up, and then so that gives us our bigger levels, of course. So if we were to come down here at sort of 111.85, that would be a big support level. We're way off there at the moment, of course. Then I've had to take the swing low here, so slightly different way of putting my fibs on here. I could have actually put a fib there on the 61.8, so I will add that just for future reference. There we go. And now this is when you take just that pure move here, that gives us a good support level around the 113.30 area, and that clearly has been holding. But 113.00 should be actually a stronger level when you look at it, because the longer the fibs are, the more important they are, is what I'm saying. With these short-term fibs, yes, they can hold for a while, but eventually they probably will break. But the longer-term fibs will be more respected. Now, if we got down here, that would be a very, very big support level down there, around 112.00, 111.90. But say that's 250 pips away. So that's not something we're going to see this week, I would imagine. So anyway, hope that helped. Fibonacci's are very useful. Put them on your chart, break them down, and just leave them on there. And especially for you scalpers, if you guys are quite active and you're scalping in and out of levels, these fibs are really a great guide. Don't work all the time. There are some markets that I'm looking at the moment where they're not really working at all. So I'm just kind of pointing the ones out to you that are working, so you can put them on your chart and they might help you during the day. Okay, hope that was useful. I'll chat to you again tomorrow.